Hi guys, this is Abhishek. I hope you are doing good. So the markets have been bearish since the last couple of months. So now the major question is this a bull market correction or we have already started the bear market rally? So let's just skim through the charts and decide based on that. Now let's just answer this question based on the charts purely on the basis of technical analysis. Now I have taken Nifty's daily chart. Okay. Now as you have seen, Nifty has been falling continuously from 18600 levels to almost 16400 today. So that is almost a 12% correction on Nifty already. So the major question arising in everyone's mind is this a normal correction or is this a bear market rally? So let's just spend some time analyzing how much Nifty has moved from the March lows. So as you can see here, after the COVID crash, we crashed all the way towards 7,600, 500 levels, and from there has been one-way rally. So Nifty has risen almost 140 percentage. Most of the stocks would have risen 200 to 300 percentage or even more. Okay. So now, for the very first time in the last 1.5 years, Nifty has corrected close to 10%. So even before 3 or 4 months, when Nifty was correcting, if you see here, this is a sideways correction. This is purely a sideways correction, and we had one more correction before that. So this correction played out for almost 3 months, and this correction played out for almost 2 months. And in both these corrections, Nifty broke out of the range on the upside and it continued its bull market rally. Now again, we have a 12% dip on Nifty, and Nifty has been continuously making lower highs and lower lows. Now, anyone who has studied technical analysis would say this structure as a downtrend because it is making lower highs and lower lows. But just by looking at this lower high, lower low structure, we cannot arrive at the conclusion that Nifty is in a bear market rally. Now we'll try to plot trend lines. I'll just connect a trend line from this area and connecting the recent highs and the recent lows. Now, as long as Nifty manages to trade within this pattern, which is a broadening channel pattern, bulls have no reason to worry at all. Because if you look at the previous times, Nifty has been consolidating. Every time it has given a breakout on the upside and it has managed to give a beautiful rally. The same thing can happen this time as well. So, do not panic if you are an investor. Your stocks, some of them might be down even 20 to 25% when the index is down 10 to 15%. It's very normal, particularly if you had entered at the highest point, maybe here or here in any of the stocks. The chances are that you will be in a loss of 20 to 25%. It's completely okay. You can continue to hold them till Nifty holds on to this trend line. I'll mark this in a different color. As long as Nifty manages to hold on to this trend line, the bull market in Nifty is on. So I am expecting Nifty to consolidate within this pattern, and when the breakout happens above this trend line, the resistance trend line, we can expect a fierce rally on the upside. Now, what will happen if Nifty breaks down further? Let's say tomorrow or day after tomorrow, we have a breakdown from this pattern. Now, the stop loss for all of these long positions from an investing point of view should be below this level of 15,900. So as long as 15,900 manages to hold on a closing basis in the Nifty, the bull market structure is intact. Is it clear? So we'll look at two other major indices which have a big role to play in this reversal. First, let's look at Bank Nifty index now, which holds almost one third of the weightage in Nifty. So I have taken Bank Nifty's daily chart. As you can clearly see here, Bank Nifty has been moving inside this parallel channel pattern for a very long time. Now, from the highs of 41,000, we are almost down close to 18% on Bank Nifty. Today's low was almost 34,000. Now we'll just go back a bit and see what happened during the month of February. As you can see here, during February 2021, Bank Nifty was trading at 37,700, and from that high point, it has corrected almost 18% to 30,500 levels. Alright, and it has taken support exactly at the bottom of this parallel channel. And from that point, Bank Nifty has consolidated and it has gone up 35 percentage, and from that point again we are getting a 18% dip back towards the major parallel channel support. Now all the technical analysts out there should understand something very clearly. Just because a stock or an index is trading at the bottom of the trend line support or at a horizontal support, you cannot just go and buy it blindly. There are other factors to consider as well in price action. One such major thing is the momentum of the candlesticks. Compare both of these falls and analyze the momentum of the candlesticks. Look at these candlesticks, which are pretty much weaker, I would say, compared to the candlesticks which have occurred in the last 2 months. Now tell me which looks weaker for you. The candlesticks which occurred during the last 2 months, I would say these have a higher bearish momentum. Look at this fall. In just 3-4 trading sessions, Bank Nifty has fallen almost 9% from the highs, almost 3,300 points. Now, even if Bank Nifty takes a support at this blue trend line, the bottom of this parallel channel pattern, it cannot just make a vertical rally and go up like this. So, people who have studied price action would know that there is a thing called market cycle wherein you will have four stages: one, two, three, four. Now, this is stage four, which is a downtrend. And even if the downtrend is over, you'd have something called as stage one, which we call as accumulation phase. Only after the accumulation phase is over, you will see a shift from stage one to stage two, which is your uptrend. So considering the bearishness of this fall, the accumulation period might take some time. So this is clearly a market for investors and definitely not traders. Traders can never look to buy at this dip, even though this is a major support for Bank Nifty. So investors who have been looking for a good dip to enter into the market, now is the perfect time for you guys to step in. Find some good blue chip companies which have corrected a bit, like 25 to 30% also. and which are trading at good support levels. I'm not talking about any fundamental analysis here. I'm just being technical purely. I have one such example to show you, which is the banking heavyweight HDFC Bank. Now let's look at what HDFC Bank is doing. So as you all know, HDFC Bank contributes the highest weightage to Bank Nifty, and hence most of the times both of these two charts will resemble. As you can see here, even HDFC Bank is trading at the major support level of this parallel channel trend line. So again, the same thing which we discussed in Bank Nifty. If you are a trader, this is not the area for you to go long, because it would be like catching a falling knife. You will let the stock consolidate, break out above this trend line, and then turn into a buyer here. But for investor, this stock is being trading almost 18% down from the recent highs, and it is trading at the support. So this is a good level to start accumulating a bank like HDFC Bank, which can give you a return of almost 20 to 25% over the next 3 to 4 months, if and only it holds on towards major support around 1370, 1360 levels. This is definitely not a trading recommendation. Please do consult your financial advisor before taking any call. Now we'll discuss one more sector, which is the metal index. Now, metal index also is trading at a very good support level, as you can see here. So metal index, what has happened over the last 1 year, this index has shot up almost 150 percentage in the last 1.5 years. What is the major reason? I'm not worried about the fundamental changes. Let's just keep it to technical analysis. If you see weekly time frame in metal index, it has given a breakout above the multi-year trend line, which has been respected since 2018. And from that point, metal index has just shot up and it has almost made a vertical rally. In the last 6 to 8 months, it has been consolidating. Few stocks in the metal index would have also fallen 20 to 25%. But there is nothing to worry about in terms of the metal index, because it hasn't given any major breakdowns. As long as metal index manages to stay above this trend line, the bull market in metal index is also intact. Now all you need to do is to wait for metal index to break out above this pattern and look for the metal stocks which are also giving a breakout, and cash in your money in those stocks, because once metal sector gives a breakout from any pattern, there is a tendency that it will start moving violently. So just be patient and wait for this trend line to get broken, and then play the momentum trade in metal index. So this is it, guys. Do not panic as the market is keeping on falling every day and the FIs are selling. Do not worry about all of these things. Just stick to your charts. Let the index or the stocks consolidate and give a breakout, and then you can cash in your long positions. Until then, as a trader, you can stay away from the market for a while, but if you are an investor, this is one of the perfect times where you can start accumulating the stocks. At least allocate 25% of your planned capital in this market in the top blue chip companies. Please do consult your financial advisor. This is not a buying or a selling recommendation. If you like this video, please do share it with your friends. Do like, comment, and subscribe. I'll come up with a new video very soon. Until then, stay tuned. This is Abhishek signing off. Bye. Take care.